Hey guys, welcome back to another episode. In this video we will be going through our very simple yet profitable, the moving average convergence divergence trading strategy. As usual, we'll have plenty of practical examples. The idea is to fully understand this wonderful trading strategy and to make the most out of it. If you want more videos more often, please smash the like button, subscribe, and turn on the notifications bell so that you know exactly when new content is released. And don't forget to share this video across your WhatsApp, Facebook accounts, or Twitter to show your support. A very important point before we start. Everything we discuss in this video can be used for currency trading, stock trading, and crypto, because price action stays relatively consistent across different assets, so we're going to go very in-depth in this video. The most effective MACD trading strategy. The MACD is one of the simplest and most effective momentum indicators for Forex, stocks, and crypto trading. The MACD turns two trend-following indicators, moving averages, into a momentum oscillator by subtracting the longer moving average from the shorter one. Exponential moving averages are used because they respond more quickly to changes in price, since more weight is placed on the most recent price compared to the earlier prices. You can use any length of period you wish when calculating the various exponential moving averages, although the 12, 26, and 9-period averages are most frequently used. MACD indicator can be used for scalping, day trading, and swing trading strategies. To understand how the MACD can be used in trading, you first need to know how it works. This chart shows the relationship between the two moving average lines and the MACD for British pounds United States dollar. The top part of the chart contains the 1-hour prices for the currency pair, as well as a 12 and 26 exponential moving average. The bottom part contains the MACD line, the signal line, the histogram, and the zero level. Three things stand out from this chart. First, you can see that as the two moving averages move away from each other, the MACD line rises or falls. Second, you can see that, when the two moving averages cross, there is a corresponding crossing of the zero level by the MACD line. Third, when the signal line and MACD line averages cross, there is a corresponding crossing of the zero level by the MACD histogram. What I personally like about the MACD trading strategy is the indicator has a built-in filter for trade signals. This filter is easy to apply to any chart. If the MACD is below the zero line, do not open any long positions. Conversely, if the MACD indicator is above the zero line, do not open any short positions. When the MACD indicator is plotted on a chart, the most important aspect is the interaction between the two lines, as well as their positions relative to the zero line. When the MACD line is above the zero line, it indicates that the shorter period moving average is above the longer period moving average, which in turn indicates that the market is bullish. When the MACD line falls below the zero line, the shorter period moving average is less than the longer period moving average, indicating that demand is more bearish than it was in the past. In general, MACD indicators are used in one of three ways: crossovers, overbought-oversold conditions, or divergences. The MACD crossover occurs when the MACD line and the signal line intercept, often indicating a change in the momentum or trend of the market. The MACD is seen as an effective indicator, especially in trending markets. A sell signal is generated when the MACD crosses below the signal line, and a buy signal is generated when the MACD crosses above the signal line. In addition, the locations of these crossovers in relation to the zero line are helpful in determining buy and sell points. Bullish signals are more significant when the crossing of the MACD line over the signal line takes place below the zero line. Confirmation takes place when both lines cross above the zero line. Here are some examples of MACD crossovers trading strategy. This should be simple enough. Or, in this video, I've included a template with the system that you can simply upload to your chart, and it will automatically plot all these indicators perfectly on your charts, so there's nothing for you to worry about. Get the download link on the description. And now, how to use effectively the MACD divergence strategy. In this section, you'll learn to implement the MACD divergence indicator much more effectively. This is one of the most powerful trading strategies to use. You can use the MACD histogram to search for divergences, but also the MACD line and the signal line. The strongest signals appear when there is a double divergence on both the histogram and on the signal and MACD line. This is my favorite way to use the MACD and the most effective way. Trading MACD divergence, if done correctly, can provide you with a real edge in the market. It can be a powerful early indicator of trend reversals when combined with price action and support and resistance. Here are other examples of the MACD trading to fully understand this wonderful strategy and to make the most out of it. MACD Relative Vigor Index Trading Strategy. What is the Relative Vigor Index, or RVI? The Relative Vigor Index, or RVI, is a momentum indicator used in technical analysis that measures the strength of a trend by comparing a security's closing price to its trading range while smoothing the results using a simple moving average. The RVI's usefulness is based on the observed tendency for prices to close higher than they open during uptrends and to close lower than they open in downtrends. The most popular RVI trading signals. First, RVI divergences. Divergence between the RVI indicator and price suggests there will be a near-term change in the trend in the direction of the RVI's trend. So, if a security price is rising and the RVI indicator is falling, it predicts the security's price will reverse over the near term. Second, RVI crossovers. Like many oscillators, the RVI has a signal line that's often calculated with price inputs. A crossover above the signal line is a bullish indicator, while a crossover below the signal line is a bearish indicator. These crossovers are designed to be leading indicators of future price direction. And now, why the MACD Relative Vigor Index Trading Strategy? The basic idea behind combining these two tools is to match crossovers. In other words, if one of the indicators has a cross, we wait for a cross in the same direction by the other indicator. When this happens, we buy or sell the equity. Long trade setup. First, the MACD line crosses above its signal line. Second, the RVI line crosses above its signal line. Exit rules. We hold until the MACD line crosses below its signal line. Short trade setup. First, the MACD line crosses below its signal line. Second, the RVI line crosses below its signal line. Exit rules. To manage the position, we hold until the MACD line crosses above its signal line. In this video, I've included a template with the system that you can simply upload to your chart, and it will automatically plot all these indicators perfectly on your charts, so there's nothing for you to worry about. Get the download link on the description. Here are other examples of the MACD, Relative Vigor Index trading to fully understand this wonderful strategy and to make the most out of it. Regarding time frame, what is the best time frame to make the most profit from trading? The answer is, this will be completely down to you, your personal preferences and trading plan. However, 1-hour signals are more significant than 5-minute signals, just as 4-hour signals carry more weight than 15-minute signals. One common technique is to track the behavior of the MACD on 4 hours basis. As always, if you learned something new, or if you want more videos more often, make sure you subscribe, click the notification bell, and share this video across your WhatsApp, Facebook accounts, or Twitter to show your support. See you next time.